Go and find out a single fintech in the world which has become a unicorn without these three as the backbone infrastructure.
FinTech was supposed to be infrastructure which should and would have powered the change in the banking world.
40% of world's population are still outside the financial services, which will only increase the friction of doing something bad on the consumer. So basically they're putting more friction to the process of getting somebody scammed. Consumer awareness, literacy is the key to prevent such scams.
Hello, everybody, and welcome to today's episode of Couchonomics with Arjun. I have someone, very special. He's been on the show now 3 times. This time, he's actually flown down from Singapore or some part of the world because he's constantly in an aircraft to be with me in Dubai. Sitting across is Sopnendu Mohanty. Sopnendu previously was the Chief FinTech Officer with the Monetary Authority of Singapore, but more interestingly and more importantly, he is now the Group CEO of GFTN, which is Global Finance and Technology Network. We'll get into what it is. And he's also still an advisor with Monetary Authority of Singapore. With that rather long introduction, Sops, welcome back to the show.
Always a pleasure. So good to keep up with your Couchonomics.
It's a pleasure and good to see you in this part of the world.
Sure. I had a great time, couple of days into this market. Qatar, Dubai. Quite a change in the environment here in terms of fintech. The way the crowd was 2 days back in FinTech Tuesday, shows that Dubai has really picked up a big way.
No, I think the whole region has. I think Dubai led the way. We obviously the UAE. We have Qatar now sort of coming to the party quite seriously. Saudi Arabia has kind of made their presence felt, and in its small little way, we're seeing things happen in Oman. In Bahrain, obviously, Kuwait and other parts. Sops, we have about 35-40 minutes. I can go on for 2 hours with you because it's all about sort of soaking all the intelligence which I can get out of you. But let's just start with how actually SFF is going to be framed this year, and we'll come to SFF later,
Sure.
Which is, in your words, the last decade of FinTech, right? How have things evolved? Where has the promises been met? Where have the promises not been met?
Good question. Arjun, when I took this job as the group CEO, it gave me enough time to reflect the last 10 years of MAS. Broadly Singapore, broadly Asian growth in FinTech. And with my job as the Chief FinTech Officer, I had a privilege of working with so many markets. And I was trying to frame over the last 10 years in one line. And I was trying hard to give a technology brand to that. And what I came up with that 3 keywords. The last 10 years, if you look at every fintech created in the world, they would have never been there if these 3 things would have not existed. One is API, Application Program Interface. And the second one is DPI, sounds almost poetic, Digital Public Infrastructure. And the third one is cloud. Go and find out a single fintech in the world which has become a unicorn without these 3 as the backbone infrastructure. Without cloud, there's no scaling. Without DPI, regulators would have hardly allowed you to do an online onboarding without being showing in front of a branch because they are a trusted infrastructure to do KYC and move money on the payment infrastructure like India, Aadhaar, and Singapore SingPass. And API is almost, you can't think of a company which has got $100,000 cash wants to be a fintech without API. Because without API, they could have never put a light touch tech stack to put a new software. So this is how the 3 things came together. And last 10 years, that's the story, if you want to put in a shorter frame. Now, to give due credit, that the role fintech played definitely made banks to stand up and think differently about what they were doing a decade back, behind 2015. So the impact they had was that banks would also start thinking about their own tech stack, the own way of, they start thinking about consumer as the primary object of interaction. They start thinking about customer as center of every transaction they do. FinTech showed that if you solve a customer pain point, the customers are going to be with you. And on the unmet need, I think, numbers don't lie. And despite all the the story behind fintech solving inclusion, the numbers are not stacking up. 40% of world's population are still outside the financial services. This is what if you take the World Bank stats.
Agree.
So clearly shows something is missing. While the technology was promising, the founders were deeply interested on financial inclusion, but didn't take place the way way you want to see. And so there is a math mismatch when it comes to inclusion. That doesn't mean that this tech stack will not solve that problem. It could be a business model issue. It could be an issue with investors. Maybe later on are looking for returns, and they are doing the same thing what anybody will do. Go for high value customers. There could be many reasons. So that's, I think, continues to be a challenge of not getting the inclusion right.
Okay, so let me break this down, right?
Yeah.
And for me, this is great because I'm happy to be said that I'm wrong. But here's my view. I think you made a very interesting point that one of the most significant things that we've actually seen is the banks have woken up, right?
Yes, indeed.
But if I go back sort of 10, 15 years ago when, the start of the word FinTech came around, and I'm old enough to know that the word came out, a lot of it was about infrastructure. FinTech was supposed to be infrastructure which should and would have powered the change in the banking world. What I find quite bizarre is rather than banks adopt all that new technology which could have made them more efficient, more scalable, more profitable on both the revenue and possibly lowering their cost side, they actually woke up when they started seeing some threat being created by, I guess, B2C fintechs who started going to these customers through verticalized products. Then obviously digital banks started turning around. So I find that quite perverse, right? I'll pose the second question because again, I have a view from the banks and then you'll correct me. The financial inclusion challenge also, right? As you said, 40% of the world is unbanked. Having said that, even in markets like the GCC, where actually the percentage banked is quite considerable, if you look at the micro and small businesses, the lending gap sits at some obscenely high numbers, right? The 250, 300 billion. I again have a point of view. One of the biggest reasons, and people blame regulation for it, has largely been because the banks refuse to come to the party. Right? Now, I'm not coloring the banks to be these culprits who've done everything wrong, but I really want to hear your perspective on both of those assertions from me.
So let me understand. Your first part is about...
banks did not willingly adopt the technology which was out there. They
Sure.
started only changing when they finally saw threat. So
Indeed.
it wasn't an opportunity which drove
No,
that
you have to go
change.
back to when this is again my last 10 years of distilled wisdom. What exactly fintechs were doing? They were collaborating. There are a bunch of API providers providing different services, and they're stitching it together, coming with innovative product. Collaboration doesn't come to banks naturally,
Okay.
right?
Fair enough.
So they want to build proprietary infrastructure, proprietary product, exclusivity as their differentiation. So collaboration was not a natural path for banks then to build. But later on, they saw the power of collaboration. They opened up their system to consume different API. They opened up for their system to offer APIs to other people to consume. So if you go back to my initial statement, APIs triggered a cultural behavior shift from the banks from being exclusively in-house development to a collaborative framework.
Did APIs do it or did regulators force them?
I think it came in different shapes. The regulators' view on API was interestingly not a tech view. It was viewed as an outsourcing form of outsourcing. If you look at the regulatory rules which went behind the API's risk assessment, was third-party service providers being accounted for by the banks. Mm-hmm. And that put unprecedented regulatory pressure on banks to even use the API. Mm-hmm. But before we come to regulators, the very fact that as a bank, you can do a better job by collaborating with other smaller providers on certain area was not there. I think that shift happened. Mm-hmm. And that shift was a big shift because you have spent billions of dollars to build your own system. How can overnight you say, I don't need the systems, I can do in a cheaper way with a third-party partnership. So there was this dilemma in some sense from CIOs to think about how to shift. So that's the reason why banks, I would go in defense of bank, they didn't want to do or they had no intention to do it. The situation and the structure was preventing them to switch to that collaborative model. So that's my view on the bank's initial reluctance, and later on they went to that path. Regulators had a much more clarified stance on the APIs. It went better and better. In fact, Singapore issued outsourcing guidelines many years back to support API. And Ravi Menon in his speech was encouraging banks to use APIs more. So that's part one. On the inclusion part, I think the real issue for banks, including FinTech, and I think we don't want to talk about it, is profitability. End of the day, you need to keep your banks sustainable. You just can't go and give credit because that's an inclusion agenda. You got to build models or find a way to expand your credit market. We can spend hours and talking about we must do inclusion, but there has to be a model to allow it to happen. Different models came. The cost of providing credit, I must say, has significantly gone down. Different economic conditions, cyclic challenges, sometimes make an impact on how you can expand your credit. I think broadly where we are now today, I think we got some improvement on the cost structure of on the credit side. The market conditions are not necessarily in favor of expanding the credit, but there could be a further refinement to the credit models so more people can be included. One of the things I've always argued for, I know it's still a halfway to go, can we switch? Is it possible to switch the principle behind credit that you look for ability to pay back versus intent to pay back? If there's an opportunity to using AI, more so now, to build intent-based metrics, and is there opportunity to create a credit model where you can establish a good intent, a genuine, legitimate intent, and issue credit? So that's still a very early stage of the process, but that's something can be looked at due to the AI opportunity.
And that kind of flips the conversation, right? So if we start looking, we take the same theme, we take it a little bit forward, right? So the last 3 to 5 years, we've heard so much around AI and AI finding its place in the banking value chain, whether it is around optimizing their back end towards better credit model, to agents on the front end, so on and so forth. At the same time, we've had, if I may say, a rebirth of digital assets or crypto or whatever you want to call, especially on the back of the change of guard in the US. And we might want to call Trump a crypto pro president and so on and so forth. Where do these two things figure out?
In the tokenization versus AI and all this things?
Yeah, so how do you see these coming and accelerating some of the challenges that, if I say traditional fintech has not been able to solve?
No, let's say the last 10-year question. So we had a shift of banks and fintech riding on AI, DPI, and cloud. Let's assume this is pretty much done. Everybody understand to really build the future of finance, you got to have these three things in your technology stack, thinking stack, and regulators must support this. Let's assume that's a given. That's a given, and every regulators around the world do recognize as a legitimate need to change. There could be some different jurisdiction. Now we're looking at how to expand the future of finance. Let's take the angle of an inclusion angle, just to expand the market to get into that unmet banking needs. So the next stage of financial services must adopt, in my mind, a new 3 elements. One is dramatically reduce the cost structure of middle office, back office, front office, customer engagement, everything, the back-end analytics, marketing, the cost, rationalize all this thing, convert it into an opportunity for banks to expand their services, same time build cheaper financial services. This is where AI comes. Now, that is not good enough to get to that endpoint. You got to think about the banking product itself changing the form. That comes the second element, tokenization. Smart contracts, tokenized financial product, bonds, equity, deposits, checking account, products. You pick any of the financial product. Can that be converted to a token with a smart contract executing that financial product for you? So you got the intelligence, you got the form factor right, AI plus tokenization. But this two plus cloud, API, DPI has a very serious underlying risk, which is the rising threat of the network itself getting compromised by cybersecurity threats, because current encryption standards are already compromised. You got to switch to the higher encryption standard or a better encryption standard. So the third element kicks in is the quantum side. Make the encryption networks to be quantum proof from any cyber hacks. So you have to bring this three element, secure the network, reduce the cost of front office, back office, middle office, change the form factor to create more liquidity, more fractionalization, bring the cost structure down, and that becomes the future of finance.
Conceptually perfect. Realistically, how
I
possible?
mean, I don't know. I mean, we got to put the construct first, rally the crowd, let them start looking at, because I think end of the day, technologists will solve the problem. If you look at the history of tokenization, people went after that, the crypto world. What came out is a great tech stack. I think if you look today, the stablecoin market, it is already proven that that's an efficient cross-border payment network. So you can see some progress there. AI, I don't think we can question anymore. It is there to be deployed. Quantum encryptions standards, already last year, NIST came with the standards. MAS issued, in fact, they're coming with some new document in the public domain, asking banks to get ready for upgrading the encryption network. So it is progressing. The capital investment already made. If you take the tokenization market, all the necessary capital investment has been made by US and many market. So you don't need to put more capital to figure out this technology. Look at AI, all the major providers have dumped billions of dollars to build the models. So the capital investment is done. Now the time to exploit that opportunity. So to me, investment done, money has been put into the three tech stacks. Time to come, we have to start thinking about how to use this
How
opportunity.
to bring it to life. Okay, so let me try and deconstruct it. I think it'll be interesting for even the audience sort of listening in. Right? We won't have time to do all of it, but I think let's pick a couple of topics, right? Let's talk about crypto, and digital assets and DeFi, and sort of try and put all of this together. So crypto for me or digital asset has an adoption question to be asked. It's also got a branding question to be asked, right? The word crypto has, kind of polarizes a lot of the people, right? In your view, how does this digital assets world, crypto world, become mainstream at scale?
Let's look at some of the positives. If you look at consumer behavior for digital asset, it's awesome, because you ask any teenagers or any new gen customers, they believe the experience of accessing a digital asset is superior than any other asset class, right? Because just the way they've put the tech stack, click a button, you get the asset in your wallet. So the consumer friction of accessing a particular financial product, I must give it to the industry, they got it right. What probably also got right is the concept of able to tokenize financial product for real, whether it's currency or a non-currency asset. That they got it. And I think technology out there to demonstrate these things. They also got right how to validate these assets on the network against the previous complaint against that whole complex energy consuming validation process of Bitcoin. I think that is now gone. Now there's a new construct, new design. They solve that problem. Now, where is the issue now? The issue is that on which network you're going to transact. But these are tokenized assets which has to be dropped into a network, on wallet or network, and been transmitted. So this network today exists for real in public domain. It's not a SWIFT messaging system regulated, or when you move money messaging system, they're all well governed. It's like an internet which has got different governance structure or no governance structure, decentralized. So I think the unsolved part of this whole discussion is the network. And MAS particularly, and many other regulators have started putting their thoughts around it. MAS talks about the global layer one. There are new activities on the FinTech, which Nandan and his team are putting together on FinTech, how to build a network for such
We
assets.
actually had them on the show.
Yeah. So there are people thinking about this kind of network which allows, or there's a I think called in US, it's not, I'm missing that name. So there are many such initiative. BIS itself has also started putting some thought around creating a regulated network for such assets. I think once you solve the network problem, you will see more mainstreaming of banks. In yesterday's debate and on the roundtable of GFTN Select, if you look at what banks were saying, Ronit was talking about, the end of the day, banks hold the key to the success. Most of the assets are held by the bank, financial assets. So if they don't play into this process, it's not going to scale. You got to get a network, a regulatory framework where banks are comfortable to put the asset in the tokenized form on a network they're comfortable with. So if you solve the network problem, I think there's opportunity to mainstream and scale it. Despite still a long way to go, you will see some use cases stripping out of it on a standalone basis, like the stablecoin, and becoming a great opportunity for cross-border payment, which may not depend on mainstreaming other assets. Just purely on standalone basis, they can scale. So I think there's a pathway. I think we should see a much more stronger digital asset, real economy activity in a couple of years from now.
So can I be? So this is not my quote, but it's actually come out of one of the speakers who I had on the show. And what the gentleman actually said was, he said, if all we do with this great tech stack that is coming out of the decentralized world is to improve the mess that we live in, then we've missed a huge opportunity. Do you agree with that statement?
And I don't understand the statement.
So the statement is, if all we're going to do with all this technology is just apply lipstick on the pig, right?
I think I'm not sure about that, because if you speak to the set of the people who are passionate about the tech stack, they're really top class programmers. They're really making big effort to get it right. It's not easy technology, by the way. So it takes time. And I think I think maybe what is happening now, I'm taking a ringside view of this, having spent time in regulation, is that multiple things are happening same time. And in an ideal world, you will see investors, consumers, and the regulators working in almost like a synchronized way to adopt new technology. But that's not the real world. What happens is that sometimes you put a technology out there are opportunistic move on the technology, and what derails all this thing is bad actors. They come, and I mentioned on the roundtable that one of the real reason why you see a lot of this technology getting delayed in mainstreaming is consumer protection issues. You get scamsters, bad actors, suddenly making a product out in the market and getting regulators to get very worried about this product. And they come with this regulation, they come with this friction, and then that makes the whole process go slow. Then you start putting that lipstick thing to invest cosmetic and so to get by. I think there are these issues which driving this delay, but fundamentally, I think my bet is you can't stop it. It is going to happen. People told cloud is not going to happen. It happened. People spoke about DPIs too expensive, too difficult. India was a miracle, but it is today.
No, we're even in this part of the world.
Yes, so all this thing had a lot of question mark, but they got through. I think I'm pretty sure this will also get through.
Okay, so I'm going to get to the bad actors in a second, but let me put a question that again comes up quite a lot, and there are answers out there, but I'd like to hear yours, right? If you just look at movement of value, right, right now, so we've got stable coins, right? We have got tokenized deposits now,
Yes.
and JP Morgan has become, as always, a poster child for the money
Yes.
they're moving. Most of the banks are getting onto the same bandwagon, right? We have CBDCs, the wholesale versions. We also have good old real-time payments account to account and things like
Nexus.
Project Nexus and others
Yes,
which
yes.
are connecting, right? So I buy the argument that all of these have slightly different use cases. They will all coexist, but there is an element of overlap that exists across all of them, right? Is there a big interoperability nightmare that we are heading towards? And how does the regulator sort of cope up with so
in a
much
traditional
complexity?
sense, most systems, there are two or things to worry about, and interoperability is one of the things. which is always a worry for everyone. Keep regulators aside. Just for the industry to get it right, you got to get interoperability right, or else it's not going to scale and not going to work. So I think irrespective of the regulation, not as a good hygiene, interoperability is a very key part of long-term success of any tech stack, business model, whatever you want to call it. Now, sometimes interoperability is viewed as a standard discussion. You would have standard, but not necessary. You can have a different system and they can talk to each other, different standard. So there are many ways to solve the interoperability problem. Now, in the world of tokenization, it's interesting because it is a token. It is a bearer asset. So the very fact that product is cleared, there's no need to verify, validate. You are holding a token. You are the owner. A lot of interoperability issue can actually minimize because all you do is that the networks talk to each other, not the product. The product itself is tokenized. So I think the network interoperability is one of the topic which I think all of us are interested to talk. And second, on top of that, ensure that the regulatory framework under which these assets are going to be created, transferred, and monitored should be within the regulatory principles, which I think a lot of regulators are working on it. And I think there is a way out. It's not something people don't know how to solve it. I think they're figuring it out. In fact, Chainlink, for example, one of the reason they are successful is to fix exactly the same problem.
Yep.
And I was in Sergey in Frankfurt, and I think big part of his argument is that you can't stop fragmentation. It will happen because different people have different way to build solutions. But we can have a solution which will connect all these fragmented systems into a simple, cohesive, interoperable platform.
Environment. I agree with you. Okay. All right. That's reassuring. So and you know.
But I think the reason fragmentation is happening not because it's a bad thing, it's because a lot of people have new ideas and they want to build things in a certain way.
Yeah, and as you said, right, banks will have to play a little bit of a defensive game. They will build their own sort of, I guess, their own.
And the era of somebody creating a standard everybody has to follow is not going to be.
I don't think so. And that's where my next question was going to go. My cynical self always believes the world was always multipolar, right? That multipolarity has become a little bit more defined today, right? How do you see the future of financial services, FinTech within it, in this sort of increasingly multipolar world?
I think technologists should build a system which is able to cater to this multipolar world of different fragmented standard systems, design, code base. We should not be in a sense of that all will come together, agree to a global standard. It'll take years to.
No, I don't think it'll ever happen. So, yeah.
It was a success. Internet happened, but that was a different era. In this new era, I can't see that happening so easily. Rather, we should accept it as it is and build systems, designs which will allow things to connect despite being different.
Interesting. Scams, frauds. Let's talk about that a little bit. But simple question to you. Every discussion I have in the last 1 year, 50 episodes, fraud, scams get mentioned. But are we as an industry doing enough? More should be done? In your view, where should the effort be greater than it is
I think
today?
sometimes good to look at the data points. Definitely scam is going up.
Yeah, I think it hit $1 trillion or recognized numbers last year.
And the digital transformation triggered acceleration to this whole scam opportunities for a lot of these bad actors. But if I'm still right, the statistics says that almost 90% plus, it is poor consumer behavior. In fact, we allow it to happen. Many a time, you actually our digital hygiene is so poor that we allow scamster to get things from us easily. So, big part of my thinking is that more effort should be put in consumer education. More effort should be put in the design of systems to allow consumer to be aware of such risk as much possible. Because if you solve the consumer awareness problem, I think bulk of the scamster will find difficult to get through. End of the day, they need to get into unless they're breaking the encryption standard, encryption network, and getting it beyond a control. But most of the standards, most of the issues are poor consumer behavior, which they have somehow figured out as social engineering and gave their password ID. So that's one big piece. Second thing, I think systems design can have an impact. I think regulators are asking banks to think about the system design, governance structures to allow to build a better, robust system to prevent scams. To at least find a way to respond in case there's a breach faster. Third, also infrastructure being put together. Many, in Singapore, different creative ways are being thought through how to ensure that you make it difficult for scams to take money instantly. There could be a what you call as a blackout period. If you do a big transfer, the money will not move for 24 hours, and there are those thinkings are being now contemplated, also implemented to create blackout period of any big transfer. So there are this effort going around, which will only increase the friction of doing something bad on the system, on the consumer. So basically, they're putting more friction to the process of getting somebody scammed. End of the day, you can only get scammed if you allow the scam to happen. So consumer awareness literacy is the key to prevent such scams.
Fair enough. You spend a lot of your time talking about the global south. You spend a lot of your time
Yes.
in the global south. How do we get that exponential jump in the global south, specifically in regions which have not experienced that? Africa is one example of that. So, forget India. India's, it's a juggernaut, it's doing really well. Parts of Latin America are moving quite fast too. But then there are parts of the global south where either there is shortage of capital coming into the market, the regulators are not progressive enough, there are geopolitical challenges. What sort of, if I may say, I'm not suggesting it keeps you awake at night, but what are the things that kind of worry you about the global south as you sit today for the next 5 to 10 years, and what interventions do you think will happen?
I think
should happen?
And I think global south. You just in your question you mentioned that the biggest gap in the global south is lack of digital public infrastructure. Now, is it a rocket science? Answer is no. We know exactly how to build one. What is the issue? Capital. There's a need for global capital allocator in some form to allocate such capital to low-income, middle-income countries to build this infrastructure. Some effort has to be put to create capital through different grants or whatever way it is to allow these countries to put infrastructure. So people know how to build it. India, as an example, has shown the way. Brazil, as an example, shown the way how to do it. So there's no more
There's no mystery in it. Yeah.
no mystery anymore.
Yeah.
It's only cost. So my simple answer to this great question is you need money. So capital has to be allocated to this country. Now, we can say that the country's own environment in this could be something improved to allow this capital to be deployed, to have the right talent to even execute the project, because having capital alone is not enough. If I give a capital to a country, somebody has to execute. So you got to also upskill this country's talent base so that they can execute this public infrastructure or digital transformation. So the second part is skills, upskilling. Capital, upskilling. And the third one is also getting them to exposed to new way of doing things. So there is need to bring capital, talent, ecosystem templates so that they can take all the three and execute this infrastructure, which comes with other thing we talked about, the cybersecurity, customer literacy, digital literacy. All this thing has to come along with that.
Okay. And do you think there would be some parts of the global south which will make faster progress
Yes,
than others?
there will be countries. In fact, GFTN itself putting a lot of effort on upskilling. We have started a huge upskilling program in India for students. We are looking at upskilling in global south, a lot of the other countries. So upskilling, and we see a lot of demand from countries who want to upskill. Of course, we can't provide capital, but actually we can channelize some of the energy to mobilize capital to underwrite these infrastructures. And there are a lot of willing countries. It will take time, but I think the current economic realignment may be an opportunity for a lot of countries to realize, we got to take care of ourselves and we got to put the infrastructure in place so we can connect to Asia, for example, because Africa can connect to Asia and build a new trade corridor to offset some of the challenges they're facing today.
Okay. Last time you came on the show, you had just stepped into this role.
Yes.
I think you were days into the role.
Yes.
Right. Now, anyone who wants to hear about or know about GFTN, they can go check the website and they can read the press releases. I'm keen to hear your views in terms of aspects of GFTN. But let me ask you the honest question. How do you expect to make a difference
Well,
in the next 3 to 5 years?
as a group CEO, I can tell you, my view of GFTN is almost evolving every month. While we have broadly grouped ourselves to build the network, to create more collaboration, to do more digital transformation market, and to create growth capital. Broadly, they look good, but I think some of the changes we are also evolving the way we deploy these pillars. For example, the network side, in a very crude way, it looks like forums or conferences. But in a very different angle you look at it, it's actually creating a lot of high quality primary information which is shared between all the participant ecosystem. We have made an extraordinary effort to go into market which doesn't look commercially great for doing a conference. So we're pushing very hard to markets around the world, small, big forums, to just get the conversation going. So that's one big part. And I strongly believe more we talk, more we discuss, more we exchange, better for everybody. And that creates the high quality primary data we need for the future of finance. So that's one part of GFTN growing very rapidly. And I'm going to push through at least 30 locations by 2030, which will be the global hotspot for conversation. On the global collaboration side, our target is to work with countries on a long-term basis to shape their policies, regulatory practices, ecosystem development, upskilling, the whole stack. It takes time, but my bet is that we can work step by step to get to the right construct. On the technology side, I think we have plenty of choices. And what GFTN will do, it'll work with like-minded platform owners, and we will work with them to deploy those technology into different market wherever it is suitable. While we are not going to endorse any platform, but we're going to put a marketplace which at least signifies that these platforms are there for impact. Of course, commercials has to be done, and any system has to be commercially viable. On the capital side, we're still working through. We have got very encouraging support from the market. Within months, we'll be announcing our first fund, and we'll be targeting growth stage companies and follow-on rounds where we feel that they need that capital and access to our network to grow the product. So stitching all the four together can give us that unprecedented platform for a lot of markets to grow, a lot of companies to grow. End of the day, GFTN will take those activities, those commercial outcome we get, and pass the surplus profit to our holding company, which will then blend with philanthropy money to underwrite a lot of infrastructure. I just spoke about creating capital for low-income countries. So that's the ultimate dream of ours, to create value, generate capital, and pass the surplus capital to the markets to underwrite the infrastructure.
And is that
is a big ambition, and I always tend to dream big, but we'll see how it goes.
But you always should dream big, right? I grew up in a household where the saying was, shoot for the stars, and if you don't make
I'm
the
still
stars,
not seeing the star. It's still an early stage, but at least our dreams are big.
But great, right? So if you don't get to stars, you land at moon, and moon isn't a bad place to be either. So I think it's always good to have. Just a question before I move to the Singapore FinTech Festival, which is around the corner. Is there going to be an overt bias towards the global south in terms of what GFTN's focus will be, or not?
No, I think a lot of people ask this question to me. I think the expected answer by people who question that I'm a global south focus. Answer is that we don't have to bucket things. End of the day, financial sector, uniquely speaking, is a sector cannot afford a different view for different market. It is an interconnected market. We want identical regulatory standard for every market. So you cannot say that there is a different set of rules for global south, different set of rules for developed market. Because it's a regulated sector, it is so interconnected. Economics are strongly linked to each other. GFTN primary goal, along with other things, is responsible finance, responsible financial system. So you will look at global south in the same lens we'll look at advanced market, because different market brings different opportunities, and we can bring it together broadly. Orally, the systems will improve. So It may look on the surface we are global south focused, but on activity wise, we are quite distributed.
Okay. I'm going to put you on the spot now.
Sure.
Over the last 3 years, we've interacted quite a lot.
You did.
You've been in the Middle East quite often.
Yes.
Right? In the last sort of 3 to 4 months, you've made several trips. You've had the misfortune of having to hang out with me too. Right? I'm just putting you on the spot. What are you going to do with the Middle East?
For the first time, I felt GFTN can play a very good role in Middle East to collaborate with the market was 2 days back at the GFTN Select. I really genuinely believed we can do something here. And I've developed real confidence. We're also talking to some of the countries in this market, example being Qatar. We're in very good discussion with them. And I see whether it's Dubai or it's Abu Dhabi, whether it's Bahrain, I think when I speak to my counterparts, I strongly believe this market, particularly GCC, has suddenly become an epicenter for playing a clear role in the financial system. That is, and I genuinely believe. I see now clearly there is a clear role for GCC to be part of the global system.
Well, I believed it for 15 years. I've been here.
My faith become much more crystal clear really recently, I must admit, because partly
So obviously I wasn't doing a good job for the last 3 years. If it only took 2 days
I was
ago.
so busy in other market, I couldn't see it, but I'll admit it, better late than never. I think now I'm fully convinced that GCC is the one of the significant substantial global hotspot for future of finance.
Yeah, no, and I totally agree with you because I think there's a lot of things which are going for this region. I think we're attracting talent.
Yes,
I
talent.
Think, it's attracting talent. I think there's a lot of smart capital coming.
And fabulous regulatory practices, I think.
The regulator, the government policies are aligned. They're converging. They all know that diversification is key, and they're willing to put the money where their mouth is for that diversification, which, to be honest with you, 15 years ago, we used to hear a lot about that, but there wasn't much following through. And now you actually have global actors who are wanting to come and operate out of the region. Geographically, it's actually incredibly well placed because it is very much the center of the earth. So I think there's a lot which is going on.
I'll tell Arjun, whatever people think, the perception have, I'm so proud of the policymakers in this market. Their ability to be extremely diligent on capital is remarkable. I think it's completely wrong perception that a lot of money people can come and tap into it. Answer is no. The policymakers are quite diligent in where they want to put money behind. So it's important for all of us to really step up to the promise we deliver. And I think then that's a right way to unlock the capital here. So capital is there, but that doesn't take away that responsibility we all have to provide the value for the capital they want to unlock.
And true. And the capital is being deployed very interestingly both domestically. SFF, last question, 10th year. It's sort of, I remember last year at SFF, it was the 9th year and you said the 10th year is going to be interesting. Any highlights you want to share or do we all just go onto the website?
I think all, 10th year is emotionally very particular for me is a great moment to be to see this in the 10th year surviving, growing. And I'll not say growing. It has gone more deeper rather than growing in size. I think size doesn't matter anymore because we are in the cusp of the switch. As I said, the 10 years was all about API, DPI, cloud. The next 10 years is about AI, quantum, and tokenization. At this year's Singapore FinTech Festival, we'll almost take we'll slow down. Let's put it this way. At the 10th year of SFF, my instruction to the team: slow down. Time to reflect. Use the 10th year as a time to reflect the future of finance. No big statement, no big exciting topic. We'll almost spend time in reflecting what went good last 10 years, what did we learn, and how we're going to look at the next 10 years. Because something we learned last 10 years, that sometimes it's good to be thoughtful and much more coordinated rather than to create hype cycle and then burn a lot of this money, time, and then get it wrong and then recorrect and reset. So this year at SFF, you'll see a lot of discussion. May not be exciting, but a very thoughtful discussion, because if we set the base right, this next 10 years will be very exciting. I hope the base we create on the 10th anniversary will be the excitement for next 11 or 10 episode of the SFF for the next 10 years.
Yeah, well, for a guy like me, exciting scares me. I'm getting older, so deep and thoughtful is I prefer.
So you will see a much more relaxed SFF and much more thoughtful SFF.
Yeah, having said that, my experience of attending SFF quite a few times is lots and lots of Red Bulls, complete sleep deprivation,
And
all
lose some weight.
right? And I don't know how you make it through it. I must be some sort of IV connection on some sort of a coffee machine or something like that. But no, we look forward to it. Actually this year we're going to have a fairly decent delegation coming in from
I
the
strongly
from the
encourage
Middle
all
East.
your viewers to show up at SFF. It will be a good time. We have designed this time SFF to allow people to spend more time deep into topics. We took a lot of effort to design so that it doesn't look too big and overwhelming on everybody. So some design change happened, but we think we always learn, and we may think we may do it differently year after going next episodes of SFF. But welcome, bring your team, bring everybody from GCC. We'll have good time.
Well, we've done it. We had an event. You guys were kind enough to sponsor a few days ago with the grassroots community we have in the UAE.
I'm wearing
I think
a
lot of
t-shirt,
people-
FinTech
yeah,
Tuesday.
Thank you for doing that. That's a great endorsement for something which started with six of us sitting in my living room. No, we've had sign-ups over the last 2 days from what I hear. So I think there's a decent number. And what's very credible this time is the number of our CEOs are actually coming down. So actually, that's going to be
And
great
I'll
too.
have a good time talking to them because I'm a little more expanded mandate now. I can talk more things than regulation.
Exactly. Well, yes. Well, I don't think it ever stopped you in the past, but this time it can be above the line, as they say.
Sure.
Sops, thank you again for dropping in. Have a safe flight back to Singapore, which I know you're going to catch in a few hours. Best of luck with SFF. Congrats on the new role, and best of luck to your team, which is going to be driven mad over the next few years with this ambition of shooting to the
Yes,
stars.
indeed. And thanks for having me. And we'll have more discussion in future.
I look forward to it. If the show survives,
You'll survive.
you're definitely
It will
invited.
survive. Don't worry. Okay, cheers.
Thanks a lot. Ladies and gentlemen, that was Sopnendu Mohanty, who is the Group CEO of GFTN, Global Finance and Technology Network, and the advisor to the Monetary Authority of Singapore. I think if you're listening in, you've already know that SFF is front of mind for me, whether you follow me on LinkedIn or any other channel. So think about coming to Singapore if you can. But with that, I'll say goodbye and see you next week. Bye-bye.